Alrighty, welcome back, everyone. So for our next session today, we're going to be hearing from Sarah Mazer, Senior Manager of Financial Planning and Analyses at Sabra Healthcare REIT. And she's going to be speaking to us about maximizing scenario analysis in the real estate space. I can see that Sarah's already sharing her screen. Sarah, you should have presenter rights, so you should be able to share your camera, unmute yourself, and everything. Whenever you wish, go ahead and take it away.
Great. Thank you, Michael. So as you mentioned, I'm with Sabra, and I've I was the first official finance team like 6 years ago with Sabra. So relatively newer company and started in 2010. And we own and invest in real estate serving the healthcare industry. So skilled nursing, behavioral hospitals, and like senior housing facilities over the US and Canada. So we typically maintain a rolling 5-year forecast for our board of directors that meets quarterly, and we do an annual forecast for our internal team that we often share at a high level to the street since we are a publicly traded company. Similar to the Sacramento Utilities team, we also had a very large and massive Excel model before starting Synario or transitioning to Synario, and we officially transitioned in 2020. Which we've been super happy ever since. So I'll start off with our background of why we chose Synario or what our issues were with Excel. Seems similar to a lot of what the Sacramento Utilities described in that due to the size of our workbooks, we had frequent crashes, our files would get corrupted, we wouldn't know, we'd have to start with an older version, recreate it, and all this stuff usually happens when you're on the brink of a deadline. So super fun. Our changes were not traceable. It's hard to know if, so-and-so on the team made a change last year and then we forgot to update it. It was manual or some formula that we weren't, investigating properly. It was hard to manage multiple scenarios due to the size of our files. So what we would usually do is at some point copy over all the 4 files that made up our model and rename it something else, and then try to manage any changes that needed to be in both models, our base and our scenario based, at the same time. So it was very prone to human and formula errors. We had long nested if statements throughout our model. So it was very difficult to audit if you were, someone else on the team, CFO or accountant, that wanted to say, oh, like, how is this leverage number being calculated? And you're, faced with 4 rows of an if statement. So we chose Synario because it was the only financial modeling program that we ever came across, and we've looked at a handful over the years that can actually model all aspects of our business properly. It removed all of our concerns with Excel that I mentioned above, and multiple users can access and change the model, which was huge for our team. So, Duncan on our team is able to change revenues and update the cash basis tenants while I'm, entering in a new initiative for a new deal that we're considering. It's very easy to transition between scenarios, which is our favorite thing by far for our entire team. And you're able to see the impact of a given initiative if you choose to. And there's fewer moving pieces, so it was a lot easier to set up and to manage than Excel, primarily due to the whole FO type being applied. So one formula being able to be applied to multiple instances. That's huge for us. A lot of our leases for our buildings are triple net, so it's super simple. You have a lease start date, you have initial rent, it escalates by X% every year on the same lease start anniversary. So by being able to have one FO type or one main formula to say, hey, this is how you do all of them, and then you just choose that. That was huge for us. It applied to, the majority of our leases at the time of setup. But just to, be sure and make sure everything in Synario was modeled the way we expected it to work out from Excel, we did maintain both models for 3 model courses. So it was over the course of a few months, and we compared every single variance in our financial statements to make sure we're understanding what is being calculated different and why, and is it better or worse. And we actually found that 90% of the variances were because Synario was more accurate than Excel was able to. And that 10%, in case you're wondering, of why Synario wasn't. It's not because it could not calculate or it cannot calculate it more accurately. It's that we chose to have one FO type for, let's say, like our notes receivable and apply it some way. And we have a handful one-off calculations that it's calculating interest, dividing by 360 and multiplying like days of the month versus just like a regular like a simplified formula. So we chose the simplified formula, and we can obviously alter that within Synario at any time. Second polling question: how many scenarios does your team typically analyze at a time? Looks like the majority is 2 or more, which makes sense. So here is a genericized model for us. And in this situation, we're looking at a base, an upside, and a downside. So first, let me just introduce our operating summary that our team uses. So this is a report we created within Synario that actually pulls from our income statement and our balance sheet, and then other initiative-based, like our investments and our dispositions from other fields of Synario. So it's kind of a combination of everything, and it highlights all of our key metrics that our team and our board want to see. Especially as we're comparing different scenarios, it makes it a lot easier to see the dollar amount of investments, or how much we're selling, or how much equity is raised, or any loans that we need to acquire in order to fund these investments. And then obviously our per share bottom line over the course of the next couple years as compared to prior years. So we have our base, and so this is what our base consists of. We have a handful of initiatives or acquisitions and dispositions that we have entered into our system. And then we also have speculative investments, which for us, that just means things that haven't been identified yet, aren't in our pipeline, but we know that there are, deals out there that will become available in the out years. And then we've created an upside saying, if everything goes well, interest rates start to decline, stock prices start to go up, we would like to increase our investments by 250 million. We're going to assume that our stock price goes up by $4 a share. So when we raise equity, it's not as costly. And then our managed portfolio net operating income, or NOI, is going to increase every year. And our downside is going to be the opposite. We're not going to be able to purchase any speculative investments in the future. We're not going to be able to raise any equity because our share price is not going to go up, and our portfolio is not going to do as well as we expect. It's going to decrease by 10%. So first, we have all these different assumptions turned on or off here. So we use case dimensions, which you can see right here this is our managed net operating income that I mentioned. And we have it on best case, which is up 10% in our upside. And then we have our stock price set at upside here. We have all our base assumptions turned on. And down here, we also have this initiative spec upside turned on, which that's going to encompass the extra 250 million of investments that we're hoping to get. Similarly, in our downside, we're going to have our case dimensions for the net operating income at our worst case, which is down 10%. And our stock price isn't going to go up. It's just going to stay in our downside, which is no change for us here. And then we're going to turn off all of our future speculative investments that aren't in our pipeline, because they're not going to happen if nothing else improves. So once we have all those turned on or off and set up properly, you can just easily toggle on this report between our base and our upside. So you can see here, our investments went up in 2023 by 250 million. We're able to raise more equity to fund the extra investments, and our share price is going to be higher than what it is in our base. Similarly, in the downside, you'll see that our investments right here are down. They're down to 85, which 85 million in this situation is just our currently in our pipeline, pretty much already signed up to purchase in the next year, stuff like that. But there is no extra investments. There's no equity being raised. We're not raising any debt either. Everything's too expensive. And our per share earnings are significantly lower than in our base and in our downside. This is how we manage our initiatives, which is for us, it's acquisitions and dispositions. We have a table that we're able to enter in all the necessary information that flows through the rest of our model. So the price, either acquisition or sales price, what our book value is, how much it's going to cost, what type of facility it is, whether it's a skilled nursing, a senior housing managed, or a behavioral hospital. And then we have a start date, lease end, if it's a triple net lease, how long we're able to capture that rent for, and the initial yield or the rent amount based off the sales price. So down here, you can see this is how we manage all of the speculative investments that you saw in the previous slide that were either turned on or off depending on the scenario. And then over here is our equity initiatives table. So I've linked our downside to an initiative so that when it's turned on or off, it either, in this situation, it's removing all of the base equity assumed. That's why they're all negatives. And in our upside, it's linked to the upside initiative, and it's adjusting our base equity based on, we're still trying to manage to a specific leverage for our team. So you can see it's negative in 22 because of our increase in net operating income, that we don't need as much cash as we did in the base. Similarly in Q1 23, but at the end of 23 and 24, we're actually increasing our investments by 250 million, which is causing the need to raise more equity in order to fund those investments. And I mentioned case dimensions, which we use for our senior housing managed net operating income. For best and worst case, it's up and down 10% respectively. And then our stock price is another case dimension that we use, and that just assumes it's up $4 in the upside. And again, we have our operating summary, and you're able to toggle. And so this report is used for our board of directors in our deck to them that goes out quarterly, as well as for our internal executive team. We use it for every single thing. When we're writing reports, we basically export this to Excel, and there we're able to create charts from there. So the last polling question for us: how often are you meeting with leadership to present forecasts? Should pop up.
And let's see here. It should be popping up there. There it is.
Awesome.
Alrighty. Yeah, poll is active.
Great. So for us, we meet with our board 4 times a year, but it's presented with leadership being our executives 5 or more times a year.
Yeah, so about 16 responses so far. Looks like 20 responses. Looks like it's predominantly 3 to 4 times a year, or even 5 times a year, it looks like.
Great.
Sarah, does that align with your expectation, with how you thought this question would play out?
Yeah, I think, I mean, it seems pretty common to at least do it quarterly for most companies, so makes sense to me. Yeah. So this is kind of the highlight for us. We have results in Synario now. What do we do with them? How does the rest of the team view them? And like I mentioned, it's our operating summary is the primary function. So we have 2 power users on our team, and then 3, which is just our executives, finance and accounting executives that are limited users. So they aren't able to adjust any of our assumptions within Synario, but they are able to view all of our reports, tables, and we often, similar to this operating summary, we create special reports for them. So for our accounting team, they use a report that compares our budget to our actuals for a given period. So we export this to HTML out of Synario, and we basically copy and paste the whole thing, and it copies all the formatting into an Excel workbook, and then everything's always on the same rows and everything. So it just feeds into a chart that kind of shows our base, upside, and downside for our executive team and for our board that goes into our board presentation. So a little bit about this report. We, with the help of the Synario team, were able to format it exactly the way our board is used to seeing it in our deck. Prior to that being an option within Synario, or us, I guess, knowing that it was an option in Synario, we had a massive, we just exported it into its generic format and font and shading, and then we had a huge macro in Excel to format it with, the dollar signs to the correct decimal, with the correct font, with the correct bolding and everything, all the headers that go down. And here we have, you'll see two rows in certain areas of the same thing, that one shows quarterly and one shows annual. So our macro would tell it which one to choose. And the reason it's different is because in certain situations we have annualizing adjustments that change what our annual per share will be down here versus like a quarterly adjustment. So it's a total accounting thing, and it just makes it a little bit difficult to manage for us and for just exporting and showing the rest of our team. So we were able to work around that by having it on two rows and then whiting out or blanking the ones that aren't needed. So it's a lot more clear for our team than just seeing numbers here. But if you had numbers here, they're not meaning anything for us. So with the help of the Synario team, we formatted this exactly the way, so it makes it so we can just export it and copy and paste and not have to worry about a large macro, which if any of you are familiar with macros, anytime our team needed to add a row of, oh, let's see this other weighted average share, or let's add a concentration for a new tenant, we basically have to rebuild most of the macro depending on what we're changing when we're adding a new year or want to show quarters for a year. And it's always when we're working against a deadline or something, so it wasn't efficient, and being able to just export it out of Synario was huge for us. It made everything super efficient. And based on the last question, so we do import our actuals every month into Synario, and so that helps us feed into like what our assumptions are for the following year. For example, I mentioned a lot of our leases are triple net, so it's pretty standard. We're going to collect $10,000 of rent per month from X tenant, and it's going to increase the following year at the same month. In the event that there is a change to that, say we add a facility to that lease or we sell a facility from that lease, so that rent's going to change. When we import our actuals, it's going to capture that, and then all we have to do is kind of make sure that following month, say we sold it mid-month, then we're going to want to adjust the rents because it's going to pick up that prior month for that triple net lease. Our managed portfolio is not the same. It's not on a triple net lease. It's not a standard amount. It's basically we own part of the operation, so we kind of are able to capture the upside and the downside of any operation. So during COVID, we captured a lot of downside, unfortunately, and then as we're starting to pick up, we're able to recognize that upside in our managed. So instead of just a solid number every month of rent, we're able to capture any profit that's gained or obviously realize any loss. Is there any questions or anything else I can show and for everyone that I've gone through on how we're using? What leadership are we reporting to? So we report to our executive team as well as our board of directors every quarter. So our board of directors receives a PowerPoint presentation from our executives that kind of goes through all of our base and our upside and downside and any other scenarios that come into play. For example, this last quarter for our board, given the changes in LIBOR, how they're fluctuating so much, at the last minute, our CFO asked, can we add in, can I see a scenario in which LIBOR increases 10 basis points and then another where it increases, 15 basis points. And so using the case dimensions, I was able to quickly build that in. So where it just adds, the 10 or 15 basis points on top of our assumptions that we already had. So we're able to see how much extra interest expense or how much extra that's going to cost us in the out years if that were to happen. So that was something that recently our board asked for. We do also report to the CFO. So we work really closely. We're a pretty small team. So our CFO is one of our limited users in Synario. And so he is able to go in here and the explain feature that I think Tyler went through. So he's able to go in here and see like, okay, for our debt, like let's see, use the explain feature and see like what's driving that or like what's changing. And you can literally drill down and see how it's calculated, which is a lot easier than trying to follow a nested if statement in Excel. So Duncan and I work closely with the CFO and our EVP of accounting and then our senior VP of finance. And then that team works closely with the board and kind of presents everything.
Sarah, what was leadership's reaction to all of this when you introduced it?
At first, so the CFO and I both sat through, he was actually the senior VP of finance at the time. We both sat through the sample that Synario or the presentation that Synario put on for us. And we were obviously hesitant. We had already looked at 5 or more different financial modeling systems and learned quickly. And this was the first one where we're like, oh, okay, you can do that. Okay, well, can you do this? And then it was like, we were able to meet with another company that utilized Synario and see how they used it. And then we had to put on a different presentation for our CFO at the time and kind of lay out the pros and cons and like why we wanted to go this route. But now they are ecstatic, like the ability and to go through and add scenarios and see all the changes so easily and being able to just use that explain feature and go in on their own and quickly see what the changes are. They've seen how much more efficient it is for our team. And so, yeah, so now it's kind of like, how else can we use it or what else can we add? When we were using Excel, we became very limited. After 2017, we purchased another company, so it doubled the size of our company, which made our Excel file that much larger. So we were limited in the number of scenarios. If it's like a board presentation's coming up and they came, oh, we want to look at this, and it's like, well, it's going to take us 3 days. So do you want us to spend 3 days doing that, or do you want us to work on this? So everyone had to like choose their priorities. Whereas like now with Synario, everything's possible so far that's come up.
Great, thank you. Looks like another question went into the chat here. How do you feel Synario has helped to strengthen collaboration and financial storytelling?
Well, it allows us to see the various scenarios that could happen, especially given where our economy is or world is right now and how it's affected our business. We're able to see like, if rates change, if we don't get any investments, if we sell more of our portfolio, what happens to like, our moving pieces, like our net debt to EBITDA here or our earnings? How is the street going to judge us or how are they going to react if X, Y, or Z happens? So it's strengthened it for our board to be able to see so much more potential or, the downside, because that's a real thing. So we've minimized. So we used to always have a 5-year forecast. Now, as you can see, it's only like the 22 through 25 for forward. For 2 years, we were just doing a 1-year forecast because no one knew what was going to happen the next month, let alone 3 years out. So it's really strengthened our ability to provide more info for everyone, for our leadership team.
Gotcha. Yeah, no, that's great to hear. Definitely one of the biggest value drivers of the software. So we're glad to see that. You mentioned earlier in the session, efficiencies in the modeling process.
Mhm.
Can you speak a little bit to how much time you may have gained back in your day, or what you've been able to do with that time now that you've kind of introduced those efficiencies in your process?
Sure. Hours. We've gained back hours, days sometimes, depending on what was being called on us for. So being able for two of us, like Duncan and I, to make changes in the model is huge by itself. So before in Excel, obviously we could only have one person making changes, and then if we had to have all the files open so everything linked, it was like, okay, I'm done. Now it's your turn. And whereas in Synario, we're able to multitask, we're able to add initiatives, go load actuals at the same time. So it's probably days. Like we've gained days during our quarterly board season in particular, or annual forecasting time. I think that's huge. Another fun thing that we've gained is that the whole feature of being able to track changes. So there's been, a handful of instances in Synario, but there was, countless instances when we were using Excel of like, where did we get that number? Who added that? Or like, what's that percent increase for? Um, and now being able within Synario, you're able to say, see when it changed, when a particular number changed, who changed it, and then so that's kind of, oh, I changed it. Okay, I changed it back in June. Okay, what was going on back in June? It's a lot easier to kind of jog your memory versus in Excel, we added a random $3 million to this expense line. Like, wonder what that was 6 months ago. Who knows? So
Yeah,
that's made it more efficient, not digging in and looking for as many answers because they're all like right there for you.
gotcha. Yeah, yeah, that makes perfect sense.
Yeah.
Um, so what was the learning curve like for you? I mean, obviously, it probably took a little bit of time until you were able to realize those efficiencies. What was that experience like for you?
Well, honestly, the whole Synario team that helped us build it out, was incredibly helpful. And honestly, the team still is very helpful as we run into like, oh, we are acquiring a different type of investment. How do we work this into our model? Or we need to break out our current assumptions into X, Y, and Z because of how our business is changing. Um, so Duncan and I built the model from ground up with a lot of help from the Synario team. So we have a really good understanding of like every aspect of how our model is built. Um, the learning curve of being able to teach someone else, I feel like it's already the hard part's already been done. Um, but to recognize the efficiencies, we recognize them almost immediately. Just being able to save time and being like, oh, this is so cool. We can both make changes and we're not losing any downtime. The only thing we wait for someone else to do, honestly, is if I haven't added any new initiatives into the model and he's trying to like, run a report or something and you
Hmm.
want to capture everything that's needed. But
Gotcha.
other than that, yeah, we recognized all the efficiencies really almost immediately.
Gotcha. Gotcha. Yeah, thank you. Related question to that I see on the chat here. Could you talk to us a little bit about maybe your experience around auditing and catching errors or maybe fewer errors than you've seen in the past?
Yeah, there are fewer errors. We have some checkpoints. We've built out certain reports. Um, for example, we do load our forecast every quarter for every forecast into our another SAP based system that our accounting team uses. And we do that so that they can run comparison reports via an Excel add-in that they use. It's called BPC. Um, so we catch a lot of not a lot of we catch any errors that might happen. Like, for example, we might have applied a rent, like an acquisition for a new facility, to the wrong lease, or we might not have the correct interest rate on a new loan or something like that. Basically, one team gives us one answer and then accounting has another, and so we're forced to reconcile which one's accurate. But yeah, we are able to catch them. Whereas I feel like in Excel, it didn't get caught until it already became actual and we're like, oh, that's totally off. Um, it was a lot harder to manage 4 workbooks, each with like, 10 to 30 tabs with formulas everywhere. It was a lot harder to manage that than it is in Synario, with everything being in your financial statement, making sure everything ties out when you load actuals. And then you can kind of easily go through either by month or by year and see like, oh, rent's increasing this much. Okay, let me drill down and see why. Why is it? Okay, that makes sense. Or, oh, it doesn't make sense. Let's look at that. So we're able to do that before it gets seen by anybody else, which is key for us. Whereas that was a lot harder in Excel.
Yeah, yeah. Well, speaking of Excel, I see that there's another question here. How has the industry reacted to seeing your financials, through Scenario versus Excel, or maybe some previous setups? I imagine it was Excel. We talked a little bit about leadership, but just in general, has the reaction kind of been smooth, or has the transition to Scenario been smooth as far as their interpretation of results?
So the industry does not see our results, and like if we provide it to the street, since we're public, it's at a very, very high level.
Gotcha.
Basically, like how much earnings per share we're expecting, and like here are some key drivers like G&A and rents. So the industry as a whole does not see either. The closest thing would be our rating agencies, like Moody's or Fitch. They ask for detailed information from our model, and when it was from Excel, we obviously couldn't send them our file due to the size of it. There was no way to share it, so we were forced to take bits and pieces, delete a bunch of tabs, hard code it, create basically a new file that we can send to them. Whereas with Synario, we're able to just export something and send it a lot easier. Other than that, there's not a lot of people outside of our company and our board that see our detailed financials.
Gotcha. Thank you.
Yeah. Mhm.
A few more questions here that we're hoping to get to, because we do have a little bit more time. What strategies have had the biggest impact on Sabra's success?
Strategies within Synario.
Yeah, with exactly your modeling success, modeling strategies, things like that, vis-a-vis financial planning.
Got it. The biggest success is creating reports that everyone um, can use and utilize, or adding and removing and pulling from the different financial statements, um, instead of just showing them here's an income statement and then having them drill down. They have that ability, and that sometimes is what they need, but most of the time it's more high level and kind of seeing what is possible. The other is just being able to toggle themselves if they are in the Synario platform and see
Right.
like what's going on.
Gotcha. So you think having that kind of direct control over the decision making has been a value add?
Oh yeah. In Excel, there was no way for, let's say, our CFO to, or even our VP of finance to make any sort of change, because they wouldn't have had the understanding of like what's going to flow through, or they wouldn't know that you had to have every workbook open. Whereas here, it's a lot simpler to explain to the team when we build a report, like, oh, hey, we built this report. This is how it works. Here's what you can do to see different results. I mean, if you need us to change any of the assumptions, let us know, and we're able to do that on the fly. So that's been huge for them.
Gotcha.
Yeah.
Great. Yeah. And just kind of tying in the next question that we have on the chat here, do you find that type of involvement with executives gives your numbers more credibility?
Yes, definitely. They're able to understand what our abilities are within Synario, and they're able to therefore provide either more detail, or it's usually more detail that we need. So they're able to provide what we need as we ask, and we reach out. We work with all the teams. So our investment team, we are able to export essentially our initiative table that I went through with all of our assumptions here. It has timing. So we essentially are able to export that and remove any or hide anything that they don't need to see or they don't need input on. And our investments team is able to confirm or change, oh, that got pushed out, that got pushed forward, that, we're not selling that one after all, stuff like that. So it made a lot easier for us to communicate with the rest of our team, as well as them to provide feedback in, a more efficient manner.
Got it. Yeah, thank you. That's helpful.
Yeah.
Um, What would you say is so on the modeling front, maybe one of the biggest changes that you've dealt with within the last year, past couple of years?
Um, the biggest one that we recently just adjusted our model for is that our company has purchased more of, it's called a joint venture, a different type of acquisition than what we have had in the
Mhm.
past. So with that, it comes with, we recognized not 100% of the profit or loss. We recognize a portion. So whether that's 50%, 80%, 75. So now we have to build in this percentage factor based on a specific operator or a lease or agreement with us with an operator. So that we did that about a couple months ago, I believe. We went from one joint venture that in our heads it was going to be the only one, and eventually we were going to own 100% of it. So we kind of started Synario back in 2019 when we started building it with that in mind. Like, we have one joint venture, eventually we're going to purchase the whole thing. How do we build that out? And we had that built out, and then it became, we have three joint ventures, potentially more on the pipeline, and we own different percentages. They're not all, at 50%, say, and we may or may not ever purchase all, and we may sell some. So now we have to kind of build in how to pull and base it on each operator and pull the percentage. And if we do, you got to pull this debt that's associated with it. So we were able to actually really pretty quickly adjust our entire model for those new tenants. So it seems that our investment team is kind of doing more different deals these days versus like the standard triple net lease, super easy. So we're kind of working our way around like how to model those and the best way for us to continue to manage the updates for that.
Gotcha. Yeah, yeah, that makes sense. Well, you've been modeling for quite a while now, and maybe this is gonna maybe take a step back from just the modeling side of things, and maybe more of a higher level question. Given your experiences, what would be your modeling motto? What are the things to keep in mind when doing financial modeling?
Um, I think being aware of your limitations, because there's always going to be some sort of limitation. Whether that's just how you get your numbers or how the numbers are able to calculate in a platform, being aware of them and kind of knowing what that's going to do to your numbers. I don't know if that's a motto, but that's something that we have to be aware of in our end. And then when you're building something from scratch, trying to think through like every single thing, which is really hard in
Hmm.
a moment. But trying to think through of like what might happen, right? Like how might your model change from today versus like a year from now? That's been huge, and we did that. We When we first loaded our numbers, our actuals in Scenario, we did it a few times, honestly, because like we were like, oh, we want it like by facility level and all this detail, and it's possible it's going to slow your system down. So like how much for us, because we have so many, how important is that, right? And so we ended up taking a step back and be like, no, we actually don't ever look at it at that level of detail. So like kind of working through as early as possible in the process, what your limitations will be if you make certain choices.
Got it. Yeah, and that's interesting. You kind of highlighted something that I think can be pretty common oftentimes when doing these types of analyses, which is um, seeing something seems cool or something, it seems like it might be interesting to build out, and then you find out that you don't actually need it. Do you find that that type of methodology has changed the way in which you are making decisions, or maybe changed the types of outputs that you're using with leadership by kind of going through that thought process? Have you been able to
Um,
hone in on the things that are kind of pertinent versus, having a plethora of outputs that you might have kind of used out of routine?
yes, we have. We've had to talk our executive team down from wanting so much detail and essentially kind of provide a pro report to them on why we don't need it at that level, or what are
Mhm.
the benefits or risks of doing that. So that's allowed us to kind of create more like higher level. Like, they honestly shouldn't need on a regular basis to see like a facility level report, and we never did that. So it's like, why have everything loaded that way and slow everything down and make it that much more to manage when we don't look at things at that level on a regular basis.
Yeah, yeah. No, I think that type of conversation is very pertinent, right? It just allows people to level set so that they don't just go on autopilot with the types of things that they're used to seeing. So, good to see how proactive you've been there. We're winding down here on the session. I do have one more question for you, Sarah. What's
Great.
next for Sabra?
Well, since we've had more managed portfolios, so as I mentioned, so we kind of recognize the gain and the loss there. So we have to model their revenues and their expense side. So I've been trying to talk that team that does that into creating their model and scenario because I think they could really benefit from that. And then Duncan and I would be happy to help with that. And then it would be easier for us to feed into the system. Instead, they're doing it in Excel still. But now we've gone from 10 managed portfolios to 17 now, I think. So it's growing. So it's kind of like at some point their Excel file's not going to work. But I think that's something that they want to learn on their own. So, but that's what's I think is next. Closer though is I liked what Tyler's team was doing in Excel or in Scenario with their percent calculated feature and kind of having it automatically tie into that to make their numbers because we do something similar with our leverage, but I'm currently doing it manually using this in equity table, managing our leverage versus how much equity we're raising.
Mhm.
So I think for Duncan and I, that's our next project in Scenario.
Cool, cool. Yeah, I'd love
Yeah.
to see that. I mean, that's definitely one of the added one of the added bonuses of having a summit like this and getting folks together is that you can trade ideas and
Yeah.
see, gain inspiration on how others are leveraging the system. So really, really happy to see that. Um, Alrighty, we have a couple minutes here. Just want to give one final call for attendees. If there are any other questions that you'd like to ask, please go ahead and drop them in now. I don't see anyone typing, so what we can do instead is just end a couple minutes early here since we're going to have a little bit of a shorter break before the next session. But Sarah, thank you very much for your time. Much
Thank you.
appreciated. A lot of great insight here. I'm sure everyone found it as informative as I did. Yeah, thanks for your time and for your thoughts here.